If Europe goes into a recession because of the war, right, because of Putin's war, it's going to affect everyone, right? Europe is the largest economic bloc on the planet, easily the largest. Now, China wants stability, Europe wants stability, the US wants stability, I believe Southeast Asia wants stability, I believe South America wants stability, I think even Africa wants stability. But there's one guy who wants instability, and he is waging war on an independent country. So that is going to affect everyone. The question is, are we going into a recession? And if we do, what does that look like? The other question has to be, where is money flowing into? Where is money flowing out to? Is crypto the safe haven that it has put itself out to be? These are the questions we're going to ask the price charts and a few more. So stick around if you have any of those questions on your mind, because we're going to get to those and so much more. Hey everybody, this is RC Peck, and this is my weekly update, and we have a lot to go over. We're going to look at equity positions both in Europe, the US, and other parts of the world, and really get an understanding what's going on with the war from a stock market point of view. I also want to look at commodities, because commodities did not just wake up on February 24th. A lot of people probably didn't know commodities have been going up, but they have, so we need to look at that. And finally, I've been having people ask me to do a look-see over at crypto, so we're going to do that, especially with the war, which started on February 24th. And the start of the year too. So we're going to do that and so much more. And look, this video is about helping you think. It's about helping you create clarity. Because if your advisor right now has you in that 60-40 or 50-50 or 70-30, or just scratch all those terms, if you have more than 20 symbols, most people who have advisors have 75 symbols. If you are over diversified and you have 75 symbols, I can tell you right now, the 2020s is turning out to be a very bad year to be following an investment strategy that was designed 50 years ago. So let's do this. I'm going to jump over to the price chart. We're going to start with Europe here. So this is a price chart of EZU. It's MSCI Eurozone ETF. And this is what I want to show you right here. First of all, I just want to show you things are not good. Now, buyers came in here. This is important because that's the pre-COVID high. So when the market was falling, one of the first questions I had was, are buyers going to come in at the pre-COVID high? Which is literally right there. And they have so far. That is still extreme. That doesn't mean it's over. It simply means, okay, buyers came in where we wanted them to come in. But as you can look at this screen visually, Europe is not doing well. It clearly broke below this price point right here. It had a triple or quadruple top. So Europe is still in pain. Yes, it had a reflexive buy the other day where Germany was up almost 10%. First of all, let me just say, when an entire index like Germany's not a teeny country. When the DAX is up almost 10% a day, that's a sign of instability. That is not a sign of stability. That's a sign of bearishness, not bullishness. Those huge extreme moves are negative signs, and that's what we're seeing right now. So the first thing I'm noticing is there's just some reflexive buying coming in where people remember, whether you remember consciously or not, that prior to the COVID crash, this is where the markets have stopped right now, at least in Europe. Let me throw up the DAX itself, and I'll just show you the two biggest economies in Europe. So this is where the DAX stopped, exactly kind of the pre-COVID high, popped below, scared the hell out of people. But it's still within that range. So Germany, from a stock market point of view, is still in trouble. The other, or the second biggest economy on the continent is France, and you can see the very same thing here. So yes, buyers have come in. France looks a little better than Germany, so there's definitely more weakness in Germany than France. But let's just be clear here. This is not the end. We should expect another testing of those lows. Just for fun, let's look at Deutsche Bank, because Deutsche Bank has I'm willing to bet Deutsche Bank has a lot of loans and business with Russia that they're not willing to sever and get rid of. And so if we see Deutsche Bank make a new low here, we know things are getting worse. Now there's the there's higher, Deutsche Bank's been a crap investment for a long time. But right here, there's the pre-COVID. Like I'm looking at this, and the price of Deutsche Bank is below that. So Deutsche Bank is not looking good. Why am I bringing up Deutsche Bank? This is not the time to bottom feed for war investments. There's a lot more weakness. The market is definitely saying there's more weakness than not. So Europe is definitely looking weak. I would not be buying Russian oil companies. It's very, very clear to me, at least, that Putin is probably going to nationalize all the energy companies. He'll just screw all the shareholders. He does not care. Clearly, he's a lonely 69-year-old madman, no wife, no kids, no nothing, and apparently no one to tell him what to do. So madman is still in control, sadly, of what's going on in Europe. As far as stability around the rest of the world, really the only countries that are doing well are countries that produce commodities. So Brazil, let me just throw up Brazil here. Here's EWZ, looking horrible coming into this year. But this year it's up about 25%. And then you have Australia, which looks pretty good relative to everything else that's going on. Again, here's the start of the year here in Australia, the Australian stock market barely down. And then Canada is right there at even. So the stock markets around the world that are doing best are the ones that are producing commodities. The S&P 500 is still holding up pretty well. Now, relative to Canada or Australia or Brazil, it does not look good. But for non-commodity producing countries, the U.S. is definitely holding up better than Europe. Emerging markets, they peaked over a year ago and they continue to accelerate to the downside. Here's the thing. China, I believe China wants stability, because if they don't have stability, they can't sell all of their stuff to the world. And right now they're on the side of Russia. I think it eventually hurts them. The longer the war goes on, the more they will get isolated. They're really watching what the rest of the world is doing because they want to take over. They want to grab, they want to have a military operation with Taiwan. And so China's watching how the rest of the world is saying to Putin, no, not anymore. Not. We're going to cut you out. And look, if Russians want a vacation in China or North Korea, go for it. Go move to Dubai. Move to the kind of the crap parts of the world. Go for it. But you know what? London, no more. US, no more. Saint-Tropez, no more. Nice, no more. That's right. Go to those crappy little countries. Go to UAE. Yeah, move over to the Middle East. That's what they're doing right now. So emerging markets not looking good. China is really not looking good. Now look, this is a dollar-based Chinese symbol, FXI, but even if you've never studied price charts, I think you can see by that, and that's kind of like oh shit, things are getting really bad in China. Now this is A shares, so it's slightly better looking, and this is the Chinese stock market index. I don't know if they're buying their own, but what's nice about FXI is it's a freely traded ETF that's really telling us how people are voting about Chinese shares. And at least in the US, people don't want Chinese shares. They don't want Alibaba because it is imploding. People are getting out of China. I've talked in the past, people said, no, it's time to get into China. I'm like, nope, too early yet. You got to wait for something. There was some stabilizing happening, but it did not happen. So China is looking more and more unstable. Okay, so I went over all the equities. Two more things I want to go over. So one thing before I get over to crypto is just quickly pointing out that people are still moving into commodities. It had a correction. Of course it did. Gas in the US just hit lifetime highs, like that resistance. Actually, let me do this. Let me just bring it up on the screen here and show you what I'm looking at. So this is gas, the futures gas in the US, and it just popped up to its old lifetime high of 2008. It's normal for sellers to come in, which is what's happened. What we want to watch for is if it gets above that $3, let's call it $3.60 on this chart. This chart is $GASO. It's very common for sellers to come in at that testing of that old lifetime high. And that's what we saw with gas. That's what we saw with wheat. And so that's what's going on right now. Here's a price chart of wheat coming in and just sellers coming in at that old lifetime high in 2008. If wheat gets above that, if gas gets above that, by the way, oil hasn't done it yet. That's why we're seeing a correction right now in commodities. But the growth in commodities, here's GSG. It's another symbol that tracks commodities. This started way back at the bottom of the COVID bottom. So this is not a new commodity move. Commodities have been the place that people have been moving into for over a year, and they continue to move into it. It's literally been the best asset class for this decade. That's big news. Okay, I said two things before I get to crypto. Lastly, people are not moving into bonds. That is not a place of safety. Here's bonds in the US, not a place of safety. Let me just, sometimes when I get the moving averages in here, bonds are not a place, BND, bonds are not a place people are moving into in the US. It's not a place of safety overseas. It's making new lows. You can see it's peaked here. Bonds, emerging market bonds, is not a place people are moving. People are not moving into bonds. People are not moving into stocks. Where people are moving is commodities, and that did not start on February 24th. It started at the bottom of COVID. Okay, I covered those. Now I want to cover quickly crypto, because I've been getting some comments on YouTube about, hey, can you just cover crypto a little bit? Absolutely. Before we jump to crypto, here's GLD. It's a tracking symbol for gold. I have this chart set up from the beginning of the year, so that's what you're looking at. The top price chart is just the price of GLD, which is a tracking symbol for gold. And here, if you want to kind of keep your eye on the 24th, I'll point it out. There's the 24th right there when the war started in Ukraine. Putin's war started. So since the war has started, gold has moved up. It kind of had a blow off top, and it's stabilizing here a little bit. So that's gold. But let's talk about Bitcoin. This is what I did want to talk about. I wanted to bring up Bitcoin. I'll bring up maybe 2 or 3 cryptos here. So here's Bitcoin itself. This is the price chart. The top one is the price chart for Bitcoin this year. So first of all, Bitcoin's down 15% for the year. That's the bottom price chart. You can just see what it is, and it's down about 15. I'm squinting. Maybe it's 15%. So people are not flooding into Bitcoin. It's not a place of safety right now. Maybe it is in the future, but people are not flooding into Bitcoin. Now, as far as since the war started, that's where the war started right there. Yes, Bitcoin has gone up since the bottom. It's up about 11%. I discount that though, and I'll tell you why. Because if you look at this price chart, it's just one big sideways mess. And if we zoomed out and looked at Bitcoin here, BTC, USD, here is Bitcoin here. And it's just in a big sideways channel. We got sellers at the top at about 60,000, and we have buyers at the bottom around 30,000. Until it breaks out of that channel, you can't really say people are going into it or coming out of it. It's just digesting this huge move it had in 2020 and a little bit at the beginning of 2021. But look, Bitcoin could go sideways for the next year, and it would just still be digesting its move. If we zoom out, you can see that depending on how you want to measure it, Bitcoin went sideways for, again, how you measure it, 2 to 3 years. It stopped going up right here, and then it finally started going up right there. So easy math says it went sideways for 2 years. Now, in a very crazy sidewaysness, but it didn't break out to a new high for easy math 3 years. I'm guessing this sidewaysness right here could go on for another year. So that's kind of the biggest news, I think, or biggest kind of information about Bitcoin is it's just in a big sidewaysness. And then it's like, okay, well, maybe people cranked into Ethereum since the war or this year. Ethereum's down 30% for the year. And here's Ethereum since the war. Again, yes, it's up, but Ethereum is just in one big sideways mess. And let me just show it to you right here. ETH, there it is right there. It's just one big sideways mess where the sellers keep coming in at around $4,000 a coin and the buyers keep coming in at $1,800 a coin, just to give some perspective. So I guess the question would be, is there a coin, is there a crypto that is doing well? The one that's really doing the best is Luna. If you look at this right here, you can see that for the year, okay, considering most things are down 15 to 50% this year, Luna's up about 6%. There was the start of the year, and you can see it's above it. So actually, Luna is doing really well. If you want to take a point of kind of where the war started, Luna from the war is up 71%. Now, we have to zoom out and look at Luna, but I don't want to zoom out so much because it'll be too much information. So, I'll first show you this because I was using the same time range with the other two cryptos, but you can see it's up here, way up there. So let me do this. Let's zoom in to just the last 1.5 years. And I just want you to notice that Luna's at the top up here. If that breaks above the top blue line, I believe a lot of buyers are going to come in, right? That if there's a crypto that's going to be the standout crypto for 2022, it very likely could be Luna. Okay, so let's wrap this up. There is a war going on in Europe. Sadly, Europe's been a continent that is very familiar with wars over the last hundreds of years. Europe is the largest economic bloc on the planet. They were not doing as well as the US was, and now they have a war on their continent, and it is absolutely affecting everyone. So I didn't think there could be a recession. I'm not saying there's going to be a recession, but now this is the first time where it's like, recession could happen this year if things continue to get worse. Meaning if Europe goes into a recession, that's going to affect China, that's going to affect the US, and we could go into a world recession. So if that happens, stock markets are going to take an even bigger hit. But as of right now, the only stock markets around the world that are doing well are ones that are commodity-based: Brazil, Australia, and Canada. Money is not flowing into bonds. Money is not flowing into crypto. Money is not flowing into stocks. We have not seen the bottom yet. Money is flowing into commodities and has been way before the war started. Guys, let me know where I got it right, where I got it wrong. What do you think I missed? I read all the comments. It helps to leave comments, so please leave a comment, hit the like button, do the things that the algorithms can help with this channel. I appreciate you. And if you like this, of course, you're going to love my other videos. Thanks for being in my world. I appreciate you, and I'll see you on the next one. Okay, bye.